Hi Rajesh sir, welcome to the show. How are you?
Thank you, Jignesh. I am fine.
Right, sir. Sir, what is the outlook for Nifty and Bank Nifty for coming week? The background is there are a lot of investors who are, not able to digest that, the shortest 1000 rally, point rally in Nifty, and they have a lot of cash. What should they do?
Yeah, Jignesh, lot many queries we are also getting what to do, whether we should book profit or not, we should hold it or the position. So this is a classical bull market which we are, enjoying in the current rally. And we have discussed earlier also that, this momentum is likely to continue and it's anyone guess like, whether it will be halt at 17,500 or 17,800 or maybe it can move further higher towards 18,000 plus level. So it's anyone guess like, so momentum is very strong and those who are still not able to digest or those who are still not able to participate in the market, they are expecting that market will give them opportunity in a big correction and then they will start buying. So I don't see these kind of opportunity you will get in the near term at least, because if we analyze holistic picture in terms of market, in terms of economy, whatever development is happening across the globe, like globally or on the local front also. So as such, there is no major negative trigger or major negative development that we are seeing at the current juncture. Tapering was the issue in the US, that is already they have announced, and there is no as such immediate tapering they are doing it. Job data is improving on the US front. Yeah, inflation is the concern that can be tackled out. Geopolitical tension was there, Afghanistan issue was there, but it's not that much big, which can give impact to the global economy. China factor is slowly getting cooling off. If we come to the India part, India economic macro major data are showing uptick. GST collection is showing a good data. Our GDP growth data is also improving. It has shown good uptick. Manufacturing data is also improving. uh, GST collection is improving. So these all data, even automobile numbers are also good. Telecom numbers are good. Traveling numbers are also improving. Unlock activity is happening. Businesses are going back to the normalcy. So most of the things, if you analyze, out of 100, 80 things are in the positive side. 20 maybe could be little question mark, little cautious approach would be there. So if you analyze holistic picture in terms of local, global, or economic point of view, or market point of view, so you will see we are in the on the positive side. So that's the market is rewarding all this positivity whatever is coming in terms of data, and the flows is very significant from the retail participation. So that's the major driver which is driving the market at the current juncture. And those who are still waiting that market will give them opportunity, I don't see market will give you big correction. Yes, smartly sectorial rotation is going to happen, but benchmark index is going to remain in the bullish territory also, and whatever dip, minor corrective action will always get the buying interest at the lower level. So that's the view as of now in the market. So don't wait for big correction. Try to find out the opportunity within the space. Some of the sectors are available at a lower level. So like stock like automobile stocks are available at lower level. Pharma are already corrected. So those who are waiting the index will come down and then they will buy. No, that's not going to be case. You have to buy which sector is going to perform in the coming month. Then you have to pick those stocks within the basket, and then you can enjoy the market rally. Nifty, if I come to the Nifty is now comfortably trading above 17,000 level. Looking at the data for traders, I would suggest 17,200, 17,100 is the important support area for any correction or any volatility if it's come. So till these levels are intact, there is no as such worry in terms of trend. Trend is positive across all time frames. So buy on dip should be the strategy in the Nifty. On the higher side, as we are seeing based on the data setup, we are seeing that once Nifty able to cross above 17,400 level, then possibly this upward momentum could extend towards 17,550 or even 17,700 zone in near term or in short term. So, and if we break below 17,100, then some serious profit booking we can see in the market. So, our strategy would be buy on dips. Levels are 17,200 and 17,100 are the important support area. Target as of now in the near term is 17,550, 17,700 on the Nifty.
Right, sir. Sir, what do you think about Bank Nifty?
Yeah, so Bank Nifty is also showing catch-up rally, and we have seen now comfortably Bank Nifty is trading above 36,000 level, and we have seen, it's a large consolidation, breakout we have witnessed in the Bank Nifty. Almost 4 month consolidation breakout has been done on the Bank Nifty. Looking at the chart pattern, we feel that, once Bank Nifty able to cross and close about 36,800 level on the weekly closing basis or 36,900 level on the weekly closing basis, then Bank Nifty can move further higher and maybe we can see a new all-time high for the Bank Nifty also. So about 36,900, our target for Bank Nifty is 37,500, 37,700 in the near-term basis. Trend is positive for the Bank Nifty also, though whole banking stocks, banking basket is not in the bullish zone, but we are seeing the outperformance from the private bank, but some of the PSU banks are also showing some catch-up rally. So we feel that PSU bank may take lead now, and maybe especially in the state bank can show some good strength from the current level, and then maybe Bank Nifty would get the breakout above 36,900 level. On the lower side, 36,200, 36,000 are the important support area. Till these levels are intact, one should use any dip as a buying opportunity in the Bank Nifty also. So banking financial is also looking attractive at the current juncture, and we are waiting for breakout about 36,800 to see a new all-time high for the Bank Nifty also.
Right, sir. Sir, sectors that you like?
Yeah. So, sectors IT, we are continuously holding our bullish view, and continuously we are giving our view on the IT that, this sector is clearly in the bullish zone. If you don't able to buy any other sector or any other stock, just be in the IT sector. You will get a good return in the IT because IT is in bullish side. Chemical sector is in bullish zone. From IT, we like Infosys, we like TCS, Wipro. From mid-cap IT, we like Mindtree, Emphasis. From chemical space, we like Deepak Nitrite, Navin Fluorine, SRF, Lakshmi Organic. These all stocks are looking attractive. So chemical, IT, and third sector is FMCG. These three sectors are clearly in the bullish zone. So remain invested for trading point of view. In FMCG, we like Godrej Consumer Product, Dabur, Asian Paint, Bata, Titan. These all stocks are looking very promising on the FMCG pack consumer side. And another sector which we like at the current juncture, that is some of the NBFC stocks are showing good strength like Bajaj Finserv, Bajaj Finance, Chola Finance, HDFC Limited. These all stocks are looking very promising at the current juncture. Cement stocks are showing good strength. So Ambuja Cement, Ultratech Cement, ACC, these three stocks are looking promising. Textile sector we have mentioned earlier also, and still we are reiterating that textile So we like, textile sector also at the current juncture. Looking at the setup for textile sector is also showing, good sign of, bottoming out, and one should look good quality stock in the textile sector, and buy and accumulate would be our, recommendation at the current juncture. So textile is another space where, one can start looking at good quality stock for, another 2 to 3 month kind of time frame. Automobile is still not, able to show broader strength, but some of the automobile stocks are showing early sign of, bottoming out. To some of the stocks from automobile sector like Escort, Eicher Motor, Tata Motor, even Ashok Leyland, these all stocks are, showing, some bit of, bottoming out formation. But still, we would say another 1 or 2 month time frame it will take to deliver good return from the current levels. So one can look at this space also looking very attractive. Real estate space is also looking very promising. Lot many real estate stocks like, DLF, Godrej Property, Prestige Estate, Brigade, Kolte Patil. So many real estate stock has shown, good run up, and they are able to give breakout on their, near term, short term charts. So we feel that, real estate space is also looking very interesting. So consolidation would be there in pharma, automobile, some power stocks, and these three sectors are needs to watch for some consolidation. In private bank, we like ICICI Bank, Kotak Bank, HDFC Bank. These three banks are looking very attractive. So I hope I am able to cover most of the sector in this.
Right, sir. Sir, what are the stock ideas for next week?
Yeah, so we have identified a mixed bag this time, some large cap and some mid cap stocks. So first stock is from the real estate sector, that is Brigade Enterprises. If you go with the setup for the Brigade Enterprise, it's a very classical pattern we are seeing in the Brigade Enterprise at the current juncture. And looking at the setup, we feel that, that this stock can show further rally towards 415 to 420, which will deliver you, potential upside of 12 to 15% from the current juncture. If we analyze the daily setup, stock managed to give breakout of its, last 2 3 month consolidation range, and most of the, momentum indicators and strength indicators are in the positive zone. Stock is trading above all its short to medium term moving averages. The breakout on the daily chart with the volume action is suggesting that, we can see this rally in the very short period of time. So one can buy and accumulate Brigade Enterprise from the current level in any minor dips. Keep stop loss of 335. Another stock is from oil and gas sector, that is ONGC. If you look at the setup for ONGC on the daily chart, stock managed to give breakout of its, down sloping channel on the daily chart, and the breakout it suggests that, now stock can move further higher towards 135 to 140 zone in the coming trading session. Stock is now comfortably trading about 20, 50, 100-day moving average. Looking at the pattern channel breakout, it is showing that, target would be around 135 to 140, which is potential upside of 12 to 15% from the current level. One can keep stop loss of 116. Another stock is from automobile, that is Eicher Motor. If you look at the Eicher Motor daily chart, stock managed to give breakout of its multiple resistance zone in the last week, and the volume action is also increasing. Derivative data is also showing some bit of, short covering action. Looking at the setup, we expect that, stock can really further higher towards 2900 to 3000 level, which is almost 8 to 10% upside from the current level. One can buy and accumulate this Eicher Motor with stop loss of 2660. So this is stock from automobile pack, and another stock is Indigo, that is aviation sector. And as we are seeing that, unlock activity is happening, most of the states are, easing out the COVID guidelines. So Indigo is also showing good strength. Stock managed to give breakout of its multiple resistance zone. Almost the stock consolidated in 6 month in a range, and now range breakout has been done on the weekly chart with the volume action. Derivative data is also showing its good strength. So we suggest to buy Indigo also for upside target of 2060 to 2110 with stop loss of 1820. Another stock is from textile, that is Century Textile. If we look at the Century Textile setup, stock managed to give breakout of its consolidation range on the daily chart. The chart pattern suggests that now stock can move further higher towards 940-965 zone. Stock is trading above all its long-term moving averages. Strength indicators are also moving upward. Stock managed to buying the band is also suggesting buy signal. Stock is forming higher top, higher bottom formation on the daily as well as on the weekly chart. So these all bullish parameters are suggesting that Century Textile can deliver you 12 to 15% from the current level. One can buy an accumulated stock with stop loss of 785. So these all stocks we like at the current juncture to buy for short term trading perspective.
Right, sir. Thank you, sir. Thank you so much for your time. Always a pleasure talking to you.
Thank you.